Recording in progress.
Good day, ladies and gentlemen. It's my pleasure to welcome you on behalf of TCI Express and SKP Securities to TCI Express Limited's Q1 FY25 result webinar. We have with us Mr. Chandar Agarwal, Managing Director, along with his colleagues, Mr. Muktilal, CFO, Mr. Hemant Srivastava, COO, Service Express Business, and Mr. Ashok Pandey, COO, Multi-Model Express Business. This webinar is being recorded for compliance reasons, and during the course of discussion, there may be certain forward-looking statements. These should be viewed in conjunction with the risks that the company faces. We'll have the opening remarks from Mr. Chandar Agarwal, followed by a presentation and then the Q&A session. Thank you, and over to you, Chandarji.
Thank you, Naveenji. Good evening and welcome everyone to Q1 Financial 25 Earnings Conference Call of TCI Express Limited. I would like to thank all of you for joining us here today. We have already circulated our earnings presentation and press release on the website and stock exchanges, and I hope you all had a chance to review it. To start with, I will give you an overview of the business trend and performance, and then we'll hand over the call to our CFO, Mr. Mukti, to brief on our financial performance for the quarter. Let me start by giving a brief summary of the economic conditions we encountered during the first quarter of financial 25. In the realm of the global economic dynamics, India's economy continues to remain a little unstable and stable amidst global challenges. Recent projections by the IMF emphasize India's significant role alongside China in contributing to the world's economic expansion for the year 23-24. India's GDP recorded a growth of 8.5% in financial year 24. This growth is driven by the digital revolution, substantial government investments in infrastructure, expanding middle class, and sustained political stability. India is on the verge of a major structural shift in the growth trajectory, with potential to maintain an approximate 8% GDP growth over the long term. Moving on the industry front, logistics sector is poised for significant expansion, fueled by government investments and policy measures focused on improving transportation infrastructure. These includes major freight routes, development of logistics parks, and enhancement of highways, railway connectivity. Given this promising industry outlook, we are well positioned to seize the opportunity within the Indian logistics market and deliver long-term value to our stakeholders. Now, coming to the quarterly results, quarter one of financial 25 represented various challenges, including market fluctuations and increased costs due to the ongoing multimodal enhancements, as well as the high interest rates, labor costs, inflation that impacted our customers. These factors, combined with a temporary decline in volumes due to the general elections and adverse weather conditions, led to lower utilization levels and subsequent decline in margins. However, despite these temporary headwinds, we remain focused and optimistic about the near future. We anticipate stabilization in the coming quarters, driven by evolving logistics demands and strategic initiatives, which will help us capitalize and position at the leading position in the country's door delivery sector. Moving on to the brief update on business developments. During the quarter, we are making substantial strides in strengthening our multimodal business, with a clear objective to increase its contribution to 20 to 20% of our total revenue over the next 2-3 years. By expanding this segment, we aim to provide more integrated and efficient express logistics solution to our customers, enhancing both service quality and operational effectiveness. Our recent automation of Pune sorting center, which spans 140,000 square feet and features in our AI-enabled automated cross-belt sorter, has significantly boosted our operational efficiency in Western India. This advancement is a key component of our broader automation strategy. We planned We plan to extend this automation approach in our sorting centers in Calcutta and Ahmedabad over the next 1 year, 1.5 years, further improving our capabilities and service levels. In the rail logistics sector, we have successfully expanded our customer base and opened several new branches, providing excellent services to our clients. Now we are in a position to provide 24, 48, 72 hours, and 96-hour delivery schedules. One of our key initiatives this year has been the launch of the Money Back Guarantee scheme. This program sets a new standard in express delivery industry by guaranteeing on-time delivery. The scheme underscores our confidence in our service efficiency and reinforces our commitment to providing exceptional customer service across service modes, including surface, air, and rail. Additionally, TCI Express is proud to be recognized as Great Place to Work for fourth row in a year, demonstrating our ongoing commitment to a positive and rewarding work environment. As we move forward, TCI Express is dedicated in strengthening its multimodal business with again strong focus on serving SME customers through our rail and air express division and branches. Supported by the robust asset-light business model and a well-defined strategic growth plan, we believe that these initiatives and with these initiatives, we are well equipped to seize the opportunity that lie ahead and deliver sustained value to our stakeholders. Our strong leadership team also will ensure that our sales targets and business targets are achieved. With this, I would like to now hand over the call to Mr. Mukti to talk about our financial performance over the last quarter.
Yeah, thank you, sir. Yeah. So it is visible. I mean, yeah, I am audible.
Yes, you are.
Yeah, please. So you can start. So good evening, everyone, and thanks to be joining this call. And I will now give a perspective of like Q1 updates and run through this presentation for a few minutes, and then we will be open the session for the question and answer. So yeah. So this is like we completed our 8 years after demerger, and now our B2B customer is like 97% and 3% we doing as a B2C. And this is the only express company where we have our own branches. We don't have any franchisee across India. And we also like offering, new dynamics of like Sunday delivery, holiday delivery, and some scheduled deliveries to customers. And we also like our all operations are like, IT backbone. So we're doing like barcoding on packaging, GPS enabled. We now started also new thing where we, like onboarding all the supplier on through our ERP system where they come and join and submit the bill also. So it is very like highly transparent process where they have the like is a to and fro way. Whatever they want to say, we can be also say. So that sense, and we doing the like performance evaluation through ERP system. So this is like new thing we did in last 3 to 4 months, and this is like we ranked 713 on market based on March 31st, 2024. Next, please. So this is like again keep continue to like focusing on our strength, which is like again we will be a satellite business model and we will be carrying high value cargo, and we keep continue like requirement of low working capital in our to run our daily operations, and we have lowest cost structure in India in express segment. And we continue to focus, like as Mr. Chandra had mentioned, we also launched Money Bank Guarantee recently. So we will be keep continue. And we also started to like putting AI more into in our IT operation and every aspect. Like one of example, like Pune sorting center where we put AI based sorting center and everything is automated. And complete trucks, our fleet is 100% is containerized movement. There is no open truck utilizing for that. And our strategy for the long term would be like continue to focus on automation on a remaining of the sorting center. Like already we did 2-1, when remaining 10 to 12 will be doing in time to come. Yeah. Next range, please. So these are the like geographical footprint, and the same way, like our company's branches is like reached like 970 plus. Next, please. These are the two center which will like Gurgaon has been up, started on 2022 and Pune into March 22-24. Now Gurgaon and Pune both has a streamline, and we are seeing the like results, good result to be reducing the turnaround time is almost like 40%, and we will be keep continue to streamline the things. And this Pune center is really helping us to be getting the more volume from the west part of India. Yes, please. Next. Rail Express, this is we getting like robust, growth in this business. In this quarter, we grown almost like 30% on year-on-year basis. So good thing is happening. Customer base is increasing. Now it is reached to 5,000 plus, and we like we getting the repetitive order from the existing customer. And now our next thrust to be, initially we started with the like big customers, and now we want to be inculcate this business or want to spread the business with the sundry customers. So that will be like is a sustainable business model, and we can be like growth further faster on that Rail Express, because again we said time to time it is like high profit business, and also like it is a between service of air to air and surface. So it is like we are on a right place, and we want to expand it very well. Next, please. This is C2C. So C2C, again, it is like a niche segment where we go into customer and explaining them, and then as a, offering this service, and customer is getting this one very well. So it's basically doing like a milk run. There's a two model of that. One is milk run, within the state and all. And second is like we picking from the two location and delivering on one location, and vice versa, where we picking from one location and delivering on two locations. And in return, we utilizing these trucks to be in our normal transportation. So we also here utilizing more IT based system, where we in showing in advance to our like destination where what the truck is coming with this C2C service, and how it will be like what date will be vacant, and we in advance we planning for the like more cargo, so that can be put in this return truck. Yeah. This is pharma cold chain, and we are not much aggressive on that business, because we restricted ourselves with the cold chain pharma continuously. So pharma cold chain only. We are not like putting our effort on food deliveries or other items. So that's way. Next, please. So this is the like features of recently offered money bank guarantee, where we allowing this to be all the like mode of the transportation, surface, rail, and air. And it is a like money back guarantee, where supposing we are not able to deliver, we will be back their money as a whole freight to them. So this is also getting very good traction from the customer, and it will be like for long term purposes. It is really also aligning our operation very well, because we have to be delivered to customer on time. Yeah. This is a Q1 highlights. So Q1 really was, combination of various things. There's a mixed package on the like sales side and cost side, and various challenges we faced, like general election was there, and first time we also seen where our sundry customer, SME customer is also looks like impacted due to ongoing high inflation and high interest cost, and resulting our share has also like slightly changed from 52% to big customer, and 58% to like this SME customers. So that is also going on, and capacity utilized accordingly, as these are volumes was less in this quarter. So that's why utilization of our fleet has also reduced from last quarter of 83 to 82% this time. But is it like we ensure you that, or we assure you that it is like very temporarily, and is already fixed in July month, and volumes back in here. And we will be like operation efficiency also getting from Pune. Yeah. So this is a comment from the Mr. Chandra Agarwal, he has given. So next, please, we can skip here. And this is a financial performance where we in this quarter we almost like degrow by 3.5% and on year-on basis, and quarter-on-quarter 7.5%, and accordingly is impacted like EBITDA margin by 25% negative, and PAT level is also like same way around 28%. So, as I mentioned, like EBITDA decline because there is two aspect of that, as volume has declined due to ongoing general, and that was the general election and SME impact on that. And cost has also like, if you notice on that, our cost has increased almost 250 basis point, and main reason of that, we felt that, you are aware that airline consolidation is happening, and that's why airlines has increased the prices on that. So that has impacted, I think, in overall cost basis, is 100 basis point has increased in overall cost due to that. Second part of also is this privatization of this all airport has happened, and that's why this airport charges are also increased by these all airport authorities. So that is also like we seen in this quarter one. And on capital expenditure side, we spent around 7.5 crore rupees on construction of these ongoing sorting center construction at Nagpur, and we will be like on the path of to be achieving the what we have said for this capital expenditure for whole the year, because soon we'll be going to start the construction at Kolkata and Ahmedabad. Yes, please. So yeah, we already explained that. We can be go ahead like. So this is the like last 3 quarters performance. So this is visible here. Next, please. And this is like cash flow. Cash flow is really is going very well. There is no challenge on that. In this quarter, we achieved 11 crore rupees of cash flow from operations. Yeah. So this is a comparative analysis we given with the like other other 5 peers, and still you see we are the one of the leading margin profitability with in spite of this lower EBITDA in this quarter, it is there. So this is the H4, this we already discussing. We can be skip, Navinji. This is the for whole year which we discussed in last meeting. This is also we can be skip. Can skip. Yeah, this is the working capital cycle, which you can see our receivable days as maintained on a 55 days and payable days maintained at 35 days. So even we are robust in payment cycle, and it's reduced from 39 to 35. And accordingly, net working capital cycle is also like 20 days. So you can understand, everyone can understand, like we to run the daily show, we don't need the money. So whatever money we are earning, we deploying back into either deploying back to capex, or we have to be disbursed to shareholders by way of on dividend. Yeah, next please. And it is a debt-free status is going on. We have like zero debt in our balance sheet on as on 30th June 2024. This is a balance sheet, so you can see like our balance sheet has marginally increased size from 850 crore to 858 crore rupees, and mainly we put the money into in capex part. Please next. And this is a whole year. We can be skip, Navinji. We can, so you can see like in FY24, we were the like leader in margin proposition of EBITDA level as well as PAT level. So this is the like our journey from last 8 years, where we like growing from our location 32 to like 60,000 pickup and drop location, and then branches from 500 to 970, and sorting center not increased much. It is from 26 to 28, and customer base has also increased from 1.5 lakh to like 2 lakh 25 lakh numbers in 2024 and recently. And yes, you sell like we have grown sales PAT level around 20% in last 8 years. Next, please. So this is our like strategy and outlook for that. We will be keep continue to focusing on SME customers, and accordingly Now we more focusing into compensate that cost increase in air mode. We also focusing on to increase the business with SME customer in air mode as well as in rail mode. And obviously the surface express is already we focused on that. And we will be keep continue to putting capex into an automation. Yes, please. This is our like 2030 where we want to be, in next 2-3 years, we want to be a multimodal express. By 2030, we want at least 1/4 share in our overall revenue. And we will be keep ourselves as a asset light business company. Yeah. Please, we can be skip. Yeah, we can be skip. This is a long-term strategy and we already discussed in last. So this is the growth driver. Like we will be keep focusing on digital transformation where we like putting whatever we can be like make more digitalized from the manual operations. We will keep continue on that. We also focusing on green energy where we can be how we can be put more like EV vehicles and this other CNG vehicles we can be how we can be used more into in first mile or last mile deliveries. Please. This is our leadership team. Yeah. So we first on ESG side, we released our first ESG report, which is also available on our website, and you can all visit there. Yeah, please next. Yeah. These are a few awards like in the row as Mr. Chandra has mentioned, we get the like in fourth in a year Great Place to Work award, and we are India's Logistics Champion award from ICM. Please next. Our ratings are also like stable, and so we have the long-term loan rating from CRISIL rating, though we don't have any loan, but we rate ourselves from the CRISIL, which is a AA-, and ICRA has given like A1+ to us. And these are lead certificate we have. This is a market. This is my capital market information as on 20th June. That was the last working days for that quarter, because last day of this quarter was also again Saturday and Sunday. Thank you very much. Now we can be open for the like question answer session.
Thank you very much, Mukti. Friends, we now open the floor for the Q&A session. Anyone wishing to ask a question, please raise your hand and we'll take it up. We have the first question from Alok Devra. Alok, please go ahead.
Yeah, hi. Can you hear me?
Yes, you're loud and clear. Please go ahead.
Yeah. Good evening. This is Alok Devra from Motilal Oswal. So, sir, I just had a few questions. First, on the margins, it's come off quite a lot. I mean, if you look at the volumes are down around 3%. The revenues, but the margins have come off quite a lot. So, just some color, if you can provide on that, what has happened there, and also if you could provide the volume figure for this particular quarter.
Yeah, so Alokji, thanks for that. So basically, one is volume was to 235,000 ton for this quarter, and it is almost like volume side we degrew by 2% only on year-on-year basis. And on margin side, yes. So we mentioned there is a two side of things. Like one is our volume has reduced. So capacity utilization of truck has been reduced by like 1%. That is directly adding to my cost. So you seen my cost has increased almost 250 basis point operating cost. So 100 basis point by that, and 100 basis point by like airline has increased the prices, which is beyond our control. And also like now to compare, because this is a high cost high cost business, so we really could not be able to passing on to customers. So to compensate with that, we are trying to be like get the business from sundry customer where revenue is per unit is very high. So that we already started with the new setup and new branches, new team. We already working out for that. And another aspect also like we also expanding our this multimodal specifically for air and rail. We creating in a separate network, because you understand like beyond the tier 1 cities, we earlier like using, surface model to be deliver last mile, because otherwise we can't be send the vehicle in all the tier 2, tier 3 city. For example, supposing we need to deliver on, Haridwar. So today, supposing we get the material on 12 o'clock. So then it has to be go through hub and spoke model to my surface and then deliver tomorrow, whatever afternoon time or so. But now we change the strategy and want to directly send the material from Delhi to like, Haridwar. So that way we'll be like saving 24 hour for the delivery. So we will be deliver the same day delivery. Like we get the in Delhi today and we will be delivered. Same way we doing for the like, Rail Express also for last mile delivery. We creating a, network separately. So it is giving really good traction to customer and good message to that. And that's why it is a long term effect basically. So initially it is in showing in our cost, but yet long term it will be like stabilize and normalize in time to come. Yeah.
So, sir, I mean, with with around 2-3% volume degrowth, we are seeing such a large impact on margins. So, uh, I mean, these are all measures which you are talking would be more from a, which would show results in maybe 2-3 quarters time. So, do we see the margins being at current levels only because the demand environment continues to be muted, and your volumes could be flattish kind of QOQ in the second quarter? So do we see this margins of 11-12% as the new normal, or just some color, or whether you can bounce back very quickly to 14+%?
Yeah, so very good. Basically, this is, as I said, it is very temporary. In Q2 onwards, our margin, yes, you rightly said, back to normal of like 14% plus. And second, volumes we are expected because it's a pre-festive season. So we are seeing there was a upstick in the volume, and because July was, we have started with the growth, and August we are also seeing, and like, September month would be also like pre-Diwali month. So hopefully we will be close that quarter and then subsequent quarter in a growth. So I don't see any challenge for the whole year. What we like anticipated, we will be surely achieve that.
So, just last question. So for considering the, 1Q has been very muted, and we have been talking about 10-15% volume growth, in FY25. So does that number still hold, or what's the volume growth we are looking at for in FY25 and maybe in FY26?
Yeah, so for this year, we are hopeful to be get the like double-digit growth for the show, and next in the range of like 12 to 15% in FY26.
Sure. That's all from my side, so I'll come back in Q if I have more questions.
Thank you.
Thank you, sir.
Take the next question from Jainam Shah. Jainam, please go ahead.
Yeah, hi, sir. Good evening. Sir, first of all, on the data point part, if you can share the percentage, utilization percentage for this particular quarter, yeah, our fleet utilization.
It is 82%.
Is 82%. Okay, sir. And sir, just wanted to check on the top line, as a percentage or in the absolute term, how much Air Express would be contributing for this particular quarter or overall scenario in percentage term or in the absolute term?
So air domestic and air surface, air international put together is around 7.5% of the overall revenue.
Got it, sir. And sir, similar percentage for the last year could be how much?
Yes, it's the same way. Yeah, it's the same.
Okay.
There's no change on that. Yeah.
Okay, sir. And if we see that the Rail Express has grown at around 30%, while our total income were at around 3 to 4% decline in this particular quarter. So if we just back calculate, then our road surface B2B Express would be down by around 10%. So is this what what kind of challenges that we are facing because of this 10% decline in our road surface express B2B part? If we compare it with any other industry player, there has been some single digit kind of a growth has been seen in this particular quarter. And if we see on a top line or a bottom line, is in last 3 to 4 years has been quite stable for us post COVID. So is this what industry is suggesting, or are we having some business development activity which can change this thing and eventually we can move back to 10-15% kind of a growth?
So I will be, I will be given an answer one by one. So basically, there's a decline of 3.5% overall, and rail has been grown like 30%, but rails is not significant right now, as I said earlier. So surface has not degrow by like 10%. It is degrow by like 4.5% only.
Okay.
Otherwise, all services are like same sync, except rail has grown very well. So that's the one thing. Second part, come on to like after COVID, we robustly grow. I don't see like in 22, in 22 we grown around 28% that because that was like low base. But subsequently next year FY23 we also grown around 15-16%. And then in last year, in spite of all the challenges, we grown 1%. Even few companies, if you the industry numbers, they also grown the same, similar kind of numbers, but their margin has been fallen down heavily, like 50-60%. But we maintained our margin because this is again, put together. If you see a 4-5 aspect which we continuously focusing on and more emphasis on to adding the new services. So that's why it's we are in a good place and we are future ready now because you rightly said. So we, taken two steps for that. First is we started to focusing more on a multimodal, which is we separately like Mr. Ashok Pandey is our new CEO for multimodal, and then we creating a different network to separately from surface to that. Second part, we also initiated to be, giving like a separate sales team, under the supervision of Mr. Pavitra Mohan Panda. So that's the two step we taken where we, aligning the things and focusing more into in more sales part. And this is also like started to giving the results in July we seen, and hopefully August will be also like, we will be keep continue on that. So we are aligning with that, and certainly we will be get the revenue like in double-digit growth in this year.
Got it, sir. And so just last part from my side. So sir, we have introduced this money back guarantee scheme. So is this more of a confidence gaining from the customer, or has there been any cost that has been booked in this particular quarter, any substantial, or is this just the confidence kind of a thing that we are getting from the customers?
This is very good question. So basically, there is we launched this service in the mid of this quarter. And second thing, you rightly said, is the giving to confidence to customers. So we allowing this service to all three aspects because, and in this kind of thing, we always getting this, usually this service used by small customers and where we get the good revenue. That's why we launched the service, this service.
Got it, sir. If I have anything, I'll join back the queue.
Please.
Thank you, Jaina. We take the next question from Kripashankar. Kripashankar, please go ahead.
Hi, am I audible?
Yes, you are. Please go ahead.
Yeah. Good evening, and thank you for the opportunity. My first question would be on price hikes. So, Muktiji, if for the quarter, I can see that there's close to about 1.5% sort of a price hike taken in the quarter, and we have seen that there are certain escalations relating to underlying cost witnessed across industry, be it toll rates or other general inflationary hikes. Is there any further price hike anticipative which we will be taking to pass through these costs?
You rightly analyze, yes. So basically, cost dynamics is also changing in this industry where you rightly said toll cost is also, speedily growing, like each year allowing to be increased in 7 to 10% and road is improving, but somehow like we taken a, diesel price cut was in last quarter, but this has compensated with the toll increases, even more than that. So that's the thing. And another side, we really could not be found to be increase the prices with customer because again, they also facing the same challenge of ongoing inflation and high interest rate. Specifically for SME customer, we seen, earlier we used to get the easily price hike from that guy, but now they also facing lots of challenges. So I don't see we will be able to get any price hikes or maximum we can be get like 50 basis point to 100 basis point in remainder part of this year.
Understood. Understood.
Yeah.
You also highlighted in the presentation or during the presentation that the Pune facility has resulted in incremental customers in the West region. Could you throw some more light on it? What sort of so growth, if I were to put around? First, I know that there's been a decline this year, but this quarter. But can you throw some light on what would have been the growth in the West region, and where are the sectors which has performed well versus the rest of the pack?
Yeah, so basically, yeah, you rightly said. So West is growing because West is including like Maharashtra and Gujarat and all, and slightly, declining in South region, and North is doing well, and slightly impacted is East region is also slightly impacted.
Um, Sorry. So you're saying, so any numbers you can put across of what would have been the growth in West, probably, or decline in South, if I may?
No, so basically West region is also like we have around 1.5%, growth rate. And so accordingly, like, North is like flattish and South maybe like -5 or so. So this way.
All right. And contribution wise, of course, West and North would be the significant portion of our business, right? Should be close to about 50 plus percent, 55 plus percent, right?
So all three, as mentioned, all three region put together except East, we have the 85% revenue. So this is equally spread actually. There's a, yeah.
Okay. So, sir, last question, if I may. The new sorting centers were likely to bring out more efficiencies and better margin expansion prospects, etc. Um, Now, how long do we further wait for these benefits to come through? Any number you have in mind or any timeline?
So, like we earlier also mentioned, so this is giving like, very easy and dependence on labor is reduced, turnaround time is increasing with that in like Western region. So now one, corridor has completed like from north to west, north we have the like Taj Nagar and then west is that. So there's a one of region where west we get the more businesses. So in time to come also like our thrust is that now this time of truck has been reduced for this idle time. Now they're able to make more trip and ultimately they're giving the benefit to us. So like we're getting the benefit of 25 to 50 basis point in overall basis, and that will be keep continue once we will be adding the more shorting center. But over and above, like this is also giving confidence to customer because this is increasing our service level. Second part, this is also a one-off avenue for the, revenue where we getting our weight also on these sorting automated weight. So supposing there is any difference in the weight on lower side, so we can be directly calculate and then send to customer. So that is also a, revenue stream we generating through that. So ultimately, yes, we will be get the benefit out of here.
Okay. Okay. Thank you. I have one more question, but I'll come back in the queue. Thanks.
Thanks, Kripashankar. We take the next question from Akash Vora. Akash, please go ahead.
Yeah, sir. Thanks for the opportunity. So, if I go 12 months back, I think we had also come out with a guidance saying that we'll be clocking around 1750 or 1800 kind of top line this year. So, I think that guidance was shuttered last quarter itself. But then from that to revenue degrowth this quarter, I mean, would you consider that we are losing market share or what is it like?
Yeah, well, so Akash, basically, if you see like number of the all industry players is also same. In if you see the like express numbers, I am saying because all of different companies doing different work. So we are not here to any losing any market share because there's overall impact on consumption side. That's why volumes are declining. for everyone, like other express companies, you see the numbers. So I don't see we are losing market share, and rather customer confidence in us. It is with us, and we will be grow like what we are saying. So we don't have any doubt on that. Yeah.
Okay, sir.
Akash, you're on mute. Yeah. Go ahead, Akash.
Yeah. Yeah. Also, sir, I wanted to ask how much does the Rail Express business now contribute to our whole top line?
So it is, almost like 2.5% right now. Yeah.
2.5% of the whole revenue.
Yeah.
Okay. And sir, if I would just like to, I would just like to understand and increase which were good traction, and
Akash, we,
where are
Akash,
the
we are, we
and
are
which
lo-
are the industries where we are losing out as compared to our previous years? Hello.
Yeah. Akash, we just missed your question. Actually, there's
Hello.
some hello.
Akash, if you can
Yeah.
repeat
Am I
your
audible now?
question, please. Yes, you are. Please, can you repeat your question? We lost you midway.
Sure. 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 So, sir, I just wanted to understand the end user industries or segments, where we are seeing good traction, and where I mean, we are struggling as compared to our previous years.
I'm sorry, Akash, we lost in midway. Actually, I could heard your
Akash,
complete.
are you asking about the sectors to whom, in which we have lost business? Is that your question? Because we are missing you.
Correct.
There
Correct.
is no...
Correct. Correct.
Okay. Mukti, Akash is asking which are the sectors in which we have seen a decline or we have lost business from?
Yeah, well, so basically, yeah. So we still seeing the less volume growth into in textile and engineering sector, more into that.
Okay. And which ones we are seeing good growth in?
So growth is supported by like auto sector, and in few part of like pharma, we also still we seeing the like slight growth on that.
Thanks a lot, sir. I'll come back in with you.
Yes.
Thank you, Akash. Friends, anyone with a question, request you to raise your hand and we take it up. While others line up their question, we have a follow-up question from Kripa Shankar. Kripa Shankar, please
Yes,
go
sir.
ahead.
Yeah, thank you for the follow-up. Muktiji, I think, going by the trend, I think, if you're targeting about a double-digit growth for the financial year 25, the second half of this financial year has to be over 15% plus growth. Given the softness in demand, do you anticipate that sort of a growth coming through?
Yeah, so we taken like various initiation internally, like we strengthening, as mentioned, multimodal businesses, and second we also like created a separate team for the sales on the all the level. So we giving like a whole network from top to bottom. We strengthening that also. Usually, what happened this industry is drive by like operation more. So we want there is never happened in that. So we created a separate team as a for to create more sales. Third thing, we like keep adding the branches, and we number would be there. Fourth thing, we also like putting vertical wise team where like or adding new verticals, like we focusing more on solar one, and then second one basically in you know home furnishing is also like in a good segment where we are also pushing hard to be like get the business from that. So few things which is really help us to be get the business, and surely we will be try to be like touch upon this double-digit growth in the whole the for the whole year at least.
Okay, and with respect to branch addition, any number you have in mind or any specifics, zones where you will be targeting more, anything on those lines?
So we are more focusing on west and north side this time to be improve further businesses. We seen, internally where we can be like have more opportunity for the business. So we found these two zones where we will be focusing on that. So more branches like in number, I think we will be finish around 50 to 60 branches number addition for this whole year. So it will be also like mix of that. Few branches will be open for the surface business, few branches will be open for the multimodal business.
Understood.
Yeah.
Understood. Thank you and all the best.
Thank you, Kripashankar. We take the next question from Ronald Sioni. Ronald, please go ahead.
Yeah, good evening, sir. And I had a query regarding the margins. So, as you said that price hikes won't be much possible for the next few quarters. So, majorly the levers would be on the cost side. But can we improve the cost structure in a short term to such an extent that over the next 2 quarters we can come back to the margins? Because I think it would be very difficult to improve the cost structure, and the pricing side is a little bit capped. So maybe margin pressures would continue over the next 2 quarters at least for the company.
Yeah, so Ronaldo, you rightly said. So price is like almost capped because we are not really looking to enhance the prices in remainder part of this year. Second part, yes, cost side we there is a two aspect of that. One is truck utilization, which is directly impacting our costs. So from 82% we want to be with the volume growth, or supposing volume growth was the same even what we have in Q4, then my utilization level would be reached to again 83.5 to 84%. So ultimately my cost will be impacted or reduced like 150 basis point by that directly. So that's the one aspect where we will be improve our margin levels. And second part, I think because we adding the like separate network for this air mode or like rail mode, so that is still will be like continue. So because this is a strategy for the long term, so that may not be like reduced there. But yes, I think we will be improve the margin level at least 150 to 200 basis point in Q2 onwards.
So 150 bips improvement could be seen, if there is a variation of 1% in utilization, if we
Yes,
increase.
yes,
Great,
yes.
sir. Great. And on the follow-up on that, multimodal thing. So, are we, over the long term, planning to have multimodal capabilities like Transport Corporation of India, are we changing our focus to, go away from express and diversify more into, say, have rail and express as other avenues where growth is much more diversified rather than concentrated. So over the say the next 3 to 4 years down the line, should we see TCI Express being a multimodal logistics players?
Chandra, you would like answer on that?
Yes, I think that's quite possible because at the end of the day, road network is available, and the rail network is also available, and so is the air network. But I don't believe that air network is so much of relevance in time to come. Therefore, it will be very critical that we develop a rail network alongside the road network. I'm not saying that the rail network of the corridors, they will play an important role in our business because they are only for the Western Corridor and all that. They're only for containers for export and for commodities. So they are not going to be our main concern or a threat. What will be important is to use the existing network of the railways, touching every, location. So I think, yes, going forward, we will see further utilization of the rail and surface network.
But the focus solely would remain on express, or there can be, moving away from express business also.
Not at all, because express, again,
Okay,
the margins will only come from express.
right.
Others are all commodity business. I will not get into the commodity business of transportation.
Thank you, sir, and best of luck.
Thank you, Ronald. We take the next question from Kunal Bhatia. Kunal, please go ahead. Kunal, please unmute yourself and go ahead.
Yeah, am I audible now?
Yes, you are. Please go ahead.
Yeah, sir. Thanks for the opportunity. So you just did mention about the cost escalation from the air freight side, or from the cost escalation on the airport handling part. So on that account, have we taken any price increases for our customers? And if that we have taken, how much is that? And my second question is in regards to our overall growth for the current year. Uh, what is the kind of growth if we just exclude Q1 for the time being? July and August, say we are almost midway August. What is the kind of growth we have already seen in the 1.5 months which is passed by?
Yeah, well, Kunal, so I will be answer on one by one. First question you asked for the cost aspect, whether we are able to pass on to customer on air mode. This is really we couldn't able to pass on because overall air cost is already in a higher side, so customer will not be couldn't allow that. So to compensate that in time to come, we started to be adding like business from the SME customer, like we're doing for the surface cargo where we getting highest profits. Same way, we also started to doing getting business for the small customers for the rail and air both. So we will be keep working on that strategy and come on to like second part on the growth part. Yes, so we are hopeful to be getting double-digit growth in remainder 3 quarters of this year. So trend is good, like single-digit growth in July, and hopefully like it will be like increasing further in August and September much. And then subsequently last year was, if you see like quarter 3, quarter 4, there was a muted growth. So we are hopeful to be, because base is low for these 2 quarters. So hopefully we will be get the like good growth rate on second half of this year. Usually is also happening, to second half is always like good than in comparison to Q1, H1. So by this strategy, I think we will be achieve the what we are saying here.
Okay. And so you mentioned that you had an improvement of 40% in terms of turnaround time. So was it specifically only to the Pune sorting center, or in general
No,
for
in
Pune
on
and
Pune
Gurgaon
only.
both?
In Pune only. Pune and Gurgaon. Yeah.
Okay. So, sir, in terms of the overall, say, revenues, how much would have been handled through Pune and Gurgaon centers?
So if you see in and out revenue for the both center, this is, I think it's 25% put together in and out. I'm saying because they ship originally also and they ship for the like destinations also. So put together, I think is 25%.
For Pune and Gurgaon both?
Yeah.
Okay.
Yeah.
Okay, fine, sir. Thank you so much.
Thank you.
Friends, we're running out of time and we need to wind up. So request you to forward all your unanswered or follow-up questions to me on my email ID. I've shared it with everyone. Now hand over the webinar back to Chandar or Mukti for the closing remarks. Please.
Yeah, Chandra sir, please.
Thank you everyone for joining us today. We have tried to address all your questions, and if you have further inquiries, please connect with the investor relations team and we will be happy to address the same. We look forward to meeting you in the next quarter. Please stay safe and healthy. Thank you once again.
Thanks a lot.
Thank you. Thank you very much. On behalf of SKP Securities, thank you very much, Chandar, Mukti, and Hemant and Ashok for taking time out to interact with the investors. We look forward to hosting you again in the next quarter. Thank you very much and have a wonderful evening. Bye-bye.
Thank you, sir.
Recording stopped.